Welcome to Business Matters. Today's lesson will be looking at the commercial bank and the central bank. Our objectives are to describe the role of commercial banks, to outline the services offered by commercial banks, to list the functions of the commercial bank, the central bank, beg your pardon, and 4, to describe the relationship between the central bank and the commercial bank. Let's do it now. When we talk about finance is about managing funds, savings, and the lending of money. There are 3 areas of finance. We have business finance, personal finance, and public finance. Our lesson will be focusing on business finance. Business finance involves money that banks and other financial institutions makes available for commercial use. So now let us look at the role of the commercial bank. A commercial bank is a financial institution for depositing, withdrawing, and borrowing of monies. So that's their primary function in this definition, really. It is telling us that they're dealing with depositing. They're also dealing with withdrawing and borrowing of monies. What are those services that commercial banks offer? 1, they provide a safe place for customers' spare cash. So it is a safe, acts as a place of safety, right, for the cash of customers. Secondly, they provide a means by which you could collect payment on behalf of customers. So customers can collect payment on the customer's behalf. The banks provide the service of collecting payments on behalf of customers. Thirdly, assist by paying your creditors and suppliers. So the commercial bank will assist you in making payments to your creditors and suppliers. Another service that they provide is to provide loans. Additional services such as night save facilities. That means, a place where you can go and put in by night and you can put in your deposits, right? A night safety facility, safety deposit box, automated teller system, traveler's check, cash dispensers. So the commercial bank provide these services for the customers. Foreign exchange purchases and sales, yes, very important part of the bank's operation. Businesses are able to access foreign exchange to conduct their imports and exporting operation, and to access goods and services overseas. They are required to use foreign currency, so they can obtain that from the banks. Bankers draft and bankers check is also provided. Credit reference and letters of credit. Financial advice. The persons who work in the commercial bank are really specialists and expertise in finance, so they are able to give advice to their customers as to the best options that they can take. Of course, the commercial bank provided credit card services, insurance and life insurance services, standing order and direct debits. All these are types of services that are provided by the commercial bank. Now, the primary functions of the of the commercial bank are as follows. 1. Accepting deposits. Commercial banks accept deposits from people, business, and other entities in the form of a savings account. So they accept deposits in the form of savings account, and a saving deposit means that they are accepting small deposits from householders, persons, or and other persons in order to encourage savings in the economy. They accept deposit in the form of fixed deposit. That means the individual, the customer, can open a time or a fixed deposit account. The bank accepts deposits for a fixed time and that this account carries a higher rate of interest than the savings account. Current account deposits. So the banks, commercial banks as well, they accept monies or deposits in the form of for a current account deposit. These accounts do not offer any interest, right? Current accounts offer overdraft up to a pre-specified limit. Just to say, so those persons who wish to draw check using checks, draw monies rather using checks, they would have to open a current account, and the current account is not an interest-bearing account, right? But you are given up. One of the benefits is that if the account is overdrawn, that means you have written more checks than monies that are in the account. Well, the bank will give you what is considered to be a credit limit, yes, so which you can have an overdraft. The bank undertakes the obligation of paying all checks against deposits, subject to the availability of sufficient funds in the account, right? The other role of the bank is to lend, the lending of funds. The bank seeks to lend funds. Another important activity is lending funds to customers in the form of loans and advances, cash, credit, overdraft, and discounting of bills. These are ways the commercial bank will offer loan or will lend, right? They'll give you loans, give you advances, give you cash credit, give you overdraft, as we said earlier, allow you to write check a little bit more than what you have in your current account, right? An overdraft, it's a means of a loan, really, short-term loan, bank overdraft, and of course giving you advance and cash credit, etc. The commercial bank seek to provide that kind of facility. Now, what is a loan? Because we're saying here that the bank allows you to borrow or to get a loan. What is a loan? Now, loans are advances that a bank extends to its customers with or without security for a specified time and at an agreed rate of interest. So the bank, this is really how the banks make money. Yes, they lend you monies for a particular period, and based on what you are borrowing, it may be with or without security. And by security we mean a kind of asset, yes, that they're using as what we call a collateral, right? In the event that you are unable to pay back the loan, then they will use that asset. They will take ownership of that asset in compensation for the loan that they have given to you. How safe are commercial banks? Because this is a question that many times persons will ask. How safe are commercial banks? Well, commercial banks are closely monitored by the government, right? So the banks are not at will to operate on their whims and fancies and do what they please, right? They are closely monitored by the government, and in particular the central bank. The following are practices that help to ensure the bank's safety. 1. Each bank must keep a minimum reserve ratio in its account at the central bank, right? The amount may be drawn on demand by the bank. So they have to have an account with the central bank. Loans are issued on a strict condition that they may be called in before the agreed time. So that's another way of ensuring safety. They're under certain kind of condition. Loans are offered following a strict condition. Those to whom the bank lends money are carefully chosen, making sure that you have the ability to repay. Risky ventures are avoided, so the bank doesn't want to lose your money, the money of those who put those monies that other customers put in the bank. Yes, so they have to be careful in dealing with the ventures that they enter in. Collateral security is required for most business loans. And we spoke about collateral again. Any asset that is used as a means of security, alternative in the case the loans are not able to be paid, then the bank will take ownership of that asset. Now, most investments are made in securities that are liquid. Now, this other word securities used here is different from the one used in the sentence above. Most investments are made in securities. We're often talking about now documents, business or money market documents such as bonds and treasury bills. That's what we refer to as securities here in this sentence. Now let's move to deal with the central bank. Now, what is a central bank? It is a it's a regulatory body. In other words, the bank will regulate. It's a regulatory instrument. I had a tongue tied a while ago. It's a regulatory institution that governs the monetary policies and current supply in the country. In other words, let me see if I can say that. I had some challenges making some pronunciation, but may I put it this way? The central bank is a bank that is used to regulate the monetary policies and currency supply in the country. Now, primary function of the central bank is to manage the money supply in the country. That is to print and issue new notes and coins, as well as to take back old notes and coins. Secondly, to influence the volume and conditions of supply of credit. And that we continue to look at that now. It says to promote the expansion in production, right, and trade and employment. To maintain a stable monetary system. Maintain a stable monetary system. A very important responsibility of the central bank. To assist with the development of the money market in the country. Assist in the development of the money market in the country. So, for example, some years ago, in most Caribbean countries, you simply had only just commercial banks and credit union, right? But their laws and so have been put in place, right? as a result of the proposal of the central bank, so that we have what is known as other financial institutions, cambios, and other financial lending agencies that are given permission to operate in the money market arena. To act as a banker to the government. Another important function is to act as a banker to the government. That means the government's account is held by the central bank. Also, the central bank acts as the banker to the commercial bank, which means that all commercial banks and other financial institutions must hold an account with the central bank. To act as a lender of last resort. So where there are challenges that financial institutions are experiencing, in the 90s, the 1990s thereabout, there was a problem in Jamaica where many of the banks between 1980 to 1990, in the 90s, let me put it that way, and there was a problem with the banking institutions, and some banks went down because they did not have enough resources to take care of their customers. And a number of things happened, but the government had to introduce an agency, financial agency called FinSac, that was now brought into play to regulate or to assist in bringing back the banks and those financial institutions that were going bankrupt. All right. But what happens is that whenever the commercial banks have limited funds, they can go to the central bank, and they can borrow money from the central bank to help with their liquidity, right, in the commercial bank. Now, what does banker to the government means? Important that we kind of look at these statements. We said earlier that the central bank is a banker to the governments, right? To the government. Well, the central bank maintains the government's main accounts. All right? It receives taxes and other revenues on behalf of the government. It makes payments for expenditure on behalf of the government as well. It manages the nation's debt through selling and redeeming government bonds and treasury. So government want to obtain some revenue and income to finance different projects and so on. The government may offer treasury bills and bonds and so on, and it is the central bank who is charged with the responsibility to manage these activities, right? The central bank also advises the government on monetary and economic matters. So where the matter of inflation is concerned, interest rate, these two very important items in the economy that affects how the progressive the economy will be. Interest rate, as I said before, and inflation, how it is very impactful. These two elements are very important in the economy. So the central bank will advise the government in matters relating to interest rate and in relation to inflation and so on. The government uses fiscal policies, right? The government uses fiscal policies to increase or decrease taxes and to regulate spending in the economy, right? And since the government has to do that, the central bank provide assistance to them, right? The government is able to achieve economic stability through the work of the central bank. How? By setting a bank and minimum lending rate, right? So the central bank helps the government in the economics to gain economic stability by setting a bank or minimum lending rate. Now, what happens with this process is that this is a rate, this is the interest rate, right? This is the interest rate the central bank charges for loans and advances made to the commercial banks. So the commercial bank, when they want to access monies from the central bank, central bank will offer them at a certain interest rate. Now let us look at how this works. When the central bank offer, let us say, a 5% interest rate, then it can now impress on the commercial bank to make sure that they don't charge any high interest rate to inflate the situation to make the cost of money higher, right? So that if the interest rate is high, then it will affect the production process in the economy. So people who wants to produce and to invest in various industries and to access funds to do that, the cost of funds will be too high. And if the cost of funds are too high, then the investment will not take place. So the central bank has a very important role here, that when they're offering monies and loans to commercial banks and other financial institutions, they may use the interest rate as a peg to determine how high, right, interest rate will be in the other financial institutions, so that it provides easy access for investors to obtain for production purposes. This rate is manipulated to control the money supply, as I was saying earlier. So the central bank, yes, set the bank and minimum lending rates, yes, to control money supply. If the rates are high, you know that it's going to mean money will be difficult to access. Rates are low, give opportunity to access more money. Now, how the bank achieve economic stability? Well, facilitating open market operations. So the central bank facilitate open market operations. From time to time, the central bank will go into the regular market, yes, and become a regular player in the market to kind of influence where the market goes. It is an act to reduce bank lending by selling securities. So one way the central bank facilitate open market operations by going to the market and offer securities, sell securities, right? Selling securities to collect funds, right? To pull money from the economy. As it is saying here, it is an act to reduce bank lending by selling securities. So they can go out there and put more money out there, or offer better instruments than what the regular banks are doing, and that will influence how the commercial bank operate and have to perhaps bring down their interest rate or so on, so that it's accessible to the consumers. Thirdly, institute minimum cash reserves and liquid asset requirement. Well, what happens here is that the central bank require all financial institutions, particularly commercial banks, yes, require them to deposit a certain proportion of money, right, with the central bank. So all commercial bank has to have an account with the central bank, all the commercial banks, and they may be required to retain certain amount of money, right? So instituting minimum cash reserve and liquid asset requirement. Now the central bank stipulates how much deposits or other special liabilities commercial bank can hold in cash. The central bank increases Central bank increases or decreases the liquid asset requirements to influence the amount of money in circulation and available for lending, right? So they use that liquid asset requirement. So they might ask the commercial bank to deposit more money, right? And to hold more money of the monies that the central commercial bank has to influence circulation of money in the economy and lending rate as well. Setting credit controls, right? Setting credit controls. Here, through the policy of credit controls, the bank restrict lending to sectors that are not socially productive or vice versa, right? So as we said some time ago, the bank now will give particular credits. If they want to encourage a particular industry to develop, they will provide credit rates for them and reduce the restrictions of these industries accessing monies, right? As against other industries that they put restriction on and make it difficult for them to obtain monies. 5. Maintain special deposits. Instructions given to commercial banks to put away specified sums of special deposit, right? Now funds are frozen for a time and then it is released. So again, this is a means of asking the commercial banks to deposit more money with them and then for a period of time to kind of control again money supply. Moral suasion is another means by the central bank to influence the banks and the other financial institutions in the direction of ensuring that a stable economy exists and that the money market, is managed in a way that is in the best interest of the development of the country and the economy. All right. So moral suasion, the central bank uses moral suasion. Now, with regular meetings with financial institutions, the bank gives directions and guidance and persuade the other institutions, yes, the commercial banks, to follow instead of using authority under the statute. So many times what the central bank will do is seek to persuade the commercial banks and other financial institutions to follow the guideline that they're giving. All right, instead of using harsh positions where they are applying their authority under the statute. Okay, so we thank you very much for sharing with us another time as we have looked at the role of the commercial bank and the central bank in an economy. Thank you very much for sharing with us. I hope that you would have gained much knowledge and information. Please click the subscribe button and as well the like button if you would like to support and wish to have more of these videos shared with you. Thanks very much.